Good morning, everyone. Thank you for joining us this morning for this webinar on open integration. We're going to make a start straight away. Just before we do get underway, it says here that the webinar will run for an hour. It'll probably be more like 30 to 45 minutes. On the right-hand side, you have an option to ask questions throughout the webinar, and we will have a period of time at the end to cover a bit of Q&A. And we'll try and get as many of those answered as possible. If we don't get through all of the questions, what we do is we take those questions away, we'll answer them, and then you'll have a pack at the end of the webinar that we'll send that'll answer all the questions that have been raised. And as part of that pack, this webinar is being recorded and that'll be sent out to you as well. So just some quick introductions before we get started. My name's Phil Thornton and I'm lead product manager here at Wolters Kluwer. My responsibility is to look after our digital portfolio, and within that includes open integration, which we're obviously going to talk about today, but also Making Tax Digital, Twinfield, Base, Cone, data, and our advisory solutions also. And I'm joined today by my colleague Lamona Harris, who's a senior product manager, and Lamona works with me on many of the products that I've just mentioned, including obviously open integration as well. So we're going to start this morning just talking a little bit about the world of bookkeeping and how this has evolved to really try and set the scene a little bit as to why we've built what we've built with open integration. And really start thinking about some of the impact some of the changes have had in bookkeeping in recent years. So when we think historically about what was going on in practices, practices probably promoted a single on-premise solution to their clients. I know in my time, we were very much a one practice house, and in many instances, we actually wouldn't take on new clients if they didn't use a particular solution that we recommended. But with the introduction of cloud solutions, your clients have got a far greater choice of the bookkeeping solutions than ever before to choose from. And this has brought a lot of changes to the processes that are undertaken by you and how you collaborate with your clients today. But this can obviously bring a lot of challenges for your practices. So you may need to be more flexible and be able to adapt to different systems quickly. You and your staff may need advanced training on more than one solution, because a lot of the time you'll be seen as the expert to your clients. The flow of work from your clients to you, the advisor, might call for some workarounds to support these multiple solutions. But this also means that you'll likely have to manage relationships with multiple software suppliers as well. And that's also about ensuring each of these solutions meets the needs of your practice and your clients. And we also have obviously the impact of Making Tax Digital. So what we're seeing is that Making Tax Digital is clearly evolving your relationship with your clients. So even if we just think about the traditional roles and responsibilities, they seem to be changing as the bookkeeping systems have become more intuitive. Your clients have got much greater confidence in keeping track of their own income and expenditure, and perhaps using you more for the review and checks of the bookkeeping data rather than the actual doing of the bookkeeping data. So what that means is you'll be required to learn and adapt to these new solutions that are available in the market today. So your clients now have a lot of choice when it comes to choosing what bookkeeping solution meets with their needs. And there's a number of different factors that might be at play, but the main ones will be around the functionality requirements that they have. So which solutions in the market are best going to meet their needs from a functionality perspective. But also there might be budget elements to that. So they may only have a certain amount of budget available, and that may determine the type of solution that they pick. But using these cloud solutions what it will enable is for you and your clients to have a much closer working relationship, and you'll be interacting much more closely and more regularly. But with all these extra touch points with the client and the need to support all these additional bookkeeping systems in the practice, what there is there's a real risk that you may become less efficient, which in turn could affect overall profitability of the practice and the fees that you can charge. So with all that, how do you get around this? And what we'd like to do now is introduce you to our open integration functionality. And this is what will support you with this transition in the bookkeeping space. So open integration, it's essentially, it's a framework that will allow your practice to integrate with a number of different cloud bookkeeping solutions, and it removes the need to be seen as a one solution practice. But how does that differ from what you've previously been used to? So open integration, it provides a permanent connection to bookkeeping data. So you'll no longer need to export data from the bookkeeping solution, then manually import this into your compliance solution. Data is made available to you and updated every 24 hours automatically, but it can also be updated on an ad hoc basis as well. Open integration brings in transactional data, and you also have the ability to drill down into this transactional data from the trial balance in your compliance solutions and then view the source data. So what that's doing is that's removing the need for you to keep reverting back to the bookkeeping solution and check the data that's making up the values in the trial balance. Open integration allows you to make adjustments in the compliance solution. So it's removing the need for you to keep going back into the bookkeeping solution or asking your clients to go back into the bookkeeping solution to replicate adjustments that have been made in those compliance solutions. And rather than having to set up mappings each time data is imported, open integration allows for it automatically remembers the mappings that have previously been used for a specific client. And finally, and probably the most important aspect of open integration is it connects with multiple vendors. So it already connects with Xero, with Sage 1, with QuickBooks Online, with Exact, and our very own TwinField solution. And we have more planned, and we'll cover that in a little bit of detail later on. So hopefully that gives you a bit of an introduction into why we've built our open integration solution and a bit of the changes that we're seeing in the market. And what I'm now going to do is I'm going to hand over to Lamona, who's going to demonstrate how the open integration functionality works and give you a good feel of how you can benefit from this.
Thank you, Phil. So as Phil was saying, I'm going to be giving a demonstration on how open integration works with accounts production. And just to set the scene, my starting point is I have connected some data. So I'm in open integration, and my starting point is that I've actually made this permanent connection to Xero. So I'm going to use this client XYZ Limited. And if I have a look at the data tab within open integration, I can see here that there is data. And then once in accounts production, I have synchronized that data into CCH accounts production. So once I click on sync with open integration, we can see here that we have a choice. So we can either synchronize trial balance only, or we can synchronize transactions. So I chose to synchronize the trial balance only. And upon synchronization, what you would need to do is to select the mapping that's available within the mapping table. Now, when you sync, first of all, the mapping will be pointing to none. This is because if you have changed the chart of accounts within your bookkeeping solution, so it's the same as accounts production, upon synchronizing the data, then you wouldn't need to use a mapping. However, if that's not the case, then you can start with the master mapping that's already available, and then if you make any changes to the mapping, it will then save it locally to the client, and therefore you won't have to keep selecting a mapping every time the synchronization takes place. So one of the changes that we've put through as well is the ability to actually see the client mapping within the client itself. So previously, edit mapping was held in the maintenance menu for accounts production. So it did mean that only users that had maybe super user rights or admin rights could access the actual client mapping. So therefore, we thought it makes sense, and to make it easier to bring that sort of mapping within the client itself. So what this means is, if you have synchronized the data from a bookkeeping solution, and you realize that actually I'm not quite sure, I would like to move that particular mapping to a different nominal code, then you can do that. And what will happen is, once you change the mapping and click on save, it will automatically pick up the client code and attach it. So you can only ever end up with one client mapping. Now, if that is the case and you've made quite a few changes to the mapping, a message will pop up on the screen to say, to see these changes, you will need to resynchronize the data. So that's the edit mapping, and that's also available on any client, whether you use Synchronize with Open Integration or if you're just simply importing a CSV file. So the other changes that we've made, we will notice here that receipts and payments are grayed out. This is because I've synchronized with Open Integration. Most bookkeeping packages do not allow you to post to the control accounts or to the bank accounts, and therefore we have disabled receipts and payments because they're not relevant when connected to Open Integration. However, if I was in a client where I'm not connected, these items would be enabled. So the other changes that we have made as well is, if we look further down the screen here for advisors journals. Now, some of you may have already been using this functionality previously. It was called audit journals. Now, we decided to rename audit journals to advisors journals because when we were talking to our customers, we found out that quite a few of them were not using the audit journals, simply because they thought that it was only applicable for working on audit jobs. But this is not the case. You can use the audit journals for any type of job. And what it does, it allows you to basically create potential journals to see sort of what if scenarios. If I decided to adjust this figure, this is the effect it will have on profit. So it not only provides sort of what if scenarios, it also provides profit reconciliation reports as well. So it's a really useful tool to work with within accounts production. So within the advisors journals now, as it's called, there are three types of journals. So we do have adjusting. Now, this type of journal will affect profit. We have a potential journal, which is your what if scenario, which does not affect profit unless it's then put forward as an adjusting journal. And reclassification is for simply just moving items around P&L and balance sheet, but there's no effect on profit. So it's just literally a reclassification. So what I'm going to do here, I'm going to put through or show you an example of a potential journal. So batch number 5. And I'm just going to put in the working paper reference as my source reference, and also for the description as well. So I'm simply going to credit sales with 200. And accruals with 200. Now at this point I do have a choice. I can either post the journal or I can save it. So I'm just going to save it for the moment. The next journal that I'm going to create will be a reclassification. So I'm just going to give this another batch reference. And I'm just going to reclassify printing and stationery and advertising. And again, at this point, I can either choose to post it or save it. So I'm just simply going to save it for the moment. So I now have an indication that I have 2 advisors' journals that I need to review. So these are now sitting in the unposted area. And what I can do at this point, I can edit the journal. So I can go back, I can make changes. I can either post the journal. So if I post the journal, it will now sit in the posted column. And just because I've posted the journal, I can actually still delete this, because what I could do is I could unpost it, and that will now go back into the unposted area. And also I could delete it if I wanted to as well. So I'm just going to leave those journals there for the moment, sitting as unposted. And then I'm just going to have a quick look at the advisor report details here. And this will simply tell me which journals I have posted and which journals have not been posted. So I can see in this column here that they are still, well, they're there, but they haven't been posted at this stage. So that was 2 types of journal, potential and reclassification. So the next journals that I'm going to show you are going to be adjusting journals. Now, adjusting journals are only the type of journal that can be synchronized back into open integration, back into the source bookkeeping software. But what I'm going to do here, I'm going to actually bring a journal in from 3 different places. So for example, I'm going to post a journal which was created within Audit Automation, which will then flow back into accounts production. So I have a journal already created, and then what I'm going to do is I'm just going to agree that with the client, so that will then allow me to post the journal back into accounts production. So to send the journal back, I just simply go to Utilities and then Update Journals to CCH Accounts Production. So I'm going to say it's an audit journal, and that has now updated accounts production. So just to refresh that. And what this will do, this will come in as a posted journal. And there it is. So I can see that the actual source reference is from Audit Automation. So I'll come back to that in a second. The next adjusting journal I'm going to show you is from the tax return. So from corporation tax, I have basically connected the data through accounts production. And then finally, I need to create the add back journal, which I want to then be posted back to accounts. So I'm going to do that now. So I can see the amount of corporation tax that it's calculated, and I'm going to put that through as a journal, as an audit journal, and then simply post that. And then within accounts production, if I then go to posted journals, because that will also come in as a posted journal. So I'm just going to refresh the screen. And there it is. So we can see here from CCH corporation tax. And then finally, I have another journal that I'm going to put through, which is from the fixed asset register. So I'm just going to post the depreciation. And then within accounts production, if I just refresh the screen and then go back to posted, I can now see that I have 3 adjusting journals that do need to be approved. So this is where sort of a level of security comes in. So only approved adjusting journals can go back into open integration. And I'm going to show you how to approve those. But just before I approve them, most of the software packages have quite a lot of validation on them. So for example, they would require a batch reference and also a source reference, because if we don't put those through, when I try to synchronize back, the software will say that it's missing the batch reference or it's missing the source reference. So I'm going to just add those in. And I'm going to do that via view transactions. So within view transactions, because this is sort of an easier way to do that. So if I start with corporation tax, actually, sorry, I'm going to start with audit automation. So that will be WP1. And then I need a source reference for corporation tax. So that will be WP2, WP2, and then WP3, WP3. So now I've done that, I can then go back to view advisors journals to the posted area, and I actually want to post all of the, or sorry, approve all of these. So if I only wanted to pick 1 or 2, I can simply just tick the ones that I want, or I can select all of them and I'm going to choose approve. So these have now been approved, but at this stage I can still take it right back to the edit situation. So if I wanted to, I can unapprove. I can then unpost and I can post and then go through the whole sort of scenario again if there was something that you needed to edit there. But I'm quite happy with those journals as they are. And then what I'm going to do in a moment is to synchronize that data back into open integration. But just before I do that, I just wanted to have a quick look at the reports that I have available. So I'm just going to go back to Advisors Details Report. And this question here, do you wish to show the external codes? What this means is the nominal code, in my case, 0, and I would like to see that. So I'm going to choose yes, and then on the report, I can see the 0 nominal code, and I can see the AP nominal code. And then I can see the detail here from the adjustments that I've put through from audit automation, corporation tax, the fixed asset register. And also I can see here which ones have been posted and which ones haven't. So if I just close that report down. The other report I would like to show you is the adjusting journals report. And we can see the detail. So we can see now that the adjustment here is 72,902. So that's the adjusted profit. And if we then go and have a look at the potential journal, because I put one of those through earlier, so it's taken the adjusted figure now, and then if I decide to put through this potential journal, that's the effect it will have on profit. But the reclassification that I put through, there's no effect on profit. So if I close that, and we'll just have a look at the reclassification report. So now I've approved them, I've run the reports, and I'm happy with what I've done. I'm now going to synchronize the approved adjusting journals back to Open Integration. So to do that, I click on Sync with Open Integration, and I'm going to choose Synchronize. And it does remember that I originally synchronized a trial balance. Now at this point, it's just asking me to choose the 0 nominal code where I want to put these adjustments back to. So I'm going to choose and that will then continue with the process. So I can see here that 3 transactions have been exported to Open Integration. So the next stage of the process is to go back into Open Integration. And then what I'm going to do is within my business that I am connected to, I'm going to pull those transactions into Open Integration to then send back to 0. So to do that, I'm going to click on the Sync button here. And then I'm just going to check the status. So that says pending at the moment. So if I just refresh the screen, it doesn't take too long, so it should be successful in a moment. There we go, success 3. So now what I'm going to do is go into 0 and within accounting and manual journals, I can now see those 3 journals being displayed. And if I drill down through those journals, I can see the detail. So I know that this one has come from the adjustment that I put through from corporation tax. Also with Open Integration, as I mentioned, there are permissions around what users can or can't do. So you can either lock it down or it can be, very open, depending on your practice requirements. So if I just go back into accounts production, into Central, and if we have a look at the permissions, so within File, Maintenance, Security, Task Permissions, and if I choose Product Accounts Production, and if I, in the search field, if I type in Open, and within the client, we've got a permission here, can upload entries through Open Integration. So you can either give your users permission or not. And then other permissions relating to the advisors journals. These are the permissions that enable all the sort of activity around the advisors journal. So as I say, you can either lock it down or you can have it pretty much open. It's all really about choice. And I think that is me, Phil, with my demo.
Thank you very much, Lamona. I'll just switch it back over to me. Lamona, if you could just confirm that you can see my screen.
Yes, I can see your screen.
Great, thank you very much, Lamona. So I hope that demonstration has really helped with your understanding of how open integration technology can be used to really increase efficiencies within your practice. And we've focused very much on one use case there, which is around the compliance work. But there is other use cases that you can use this functionality for. And we'll cover that off in a little moment. In terms of what's next for open integration, so we've been working a lot on our open integration technology for a few months now. We've really been responding to customer feedback. And if you are currently someone who's using open integration, I'm hoping that you've seen some things there that is different to what you've been used to. And hopefully you agree that it's definitely it's a great step in the right direction. What we're really focusing on now is how we increase the number of integrations. So a key part of open integration is being able to work with as many providers as possible. So our immediate priorities now are to focus on delivering more integrations. And as you can see on the screen here, our next priorities are to integrate with Sage 50 Accounts and FreeAgent. These two specifically because this is based on customer feedback, and we will always build integrations based on what our customers are telling us they would like to see. If there's an integration that's not part of our open integration that you would like to see, please do let us know. Drop a question into the question box here, or alternatively, we do have user voice. Hopefully you're familiar with user voice and logging of requests. It's really important that we get them logged into user voice, because not only can you log requests for new connections in there, but you can also vote on other requests that have been made. So it just helps us get a really good idea of how popular future integrations may be. So before we move on to the Q&A, and I've seen we've got some questions there. I've tried to answer some while Lamona was talking also, but I see we've got some more there, and we'll try and cover them off before we finish. I just really wanted to have a quick recap on what you've seen today. So the first point really is all about choice. So we talked at the start about how your clients have got a huge amount of choice when it comes to the solutions that they'll choose for the purposes of bookkeeping. And also now there's a whole load of choice around the roles and responsibilities and who does what, and how that all works now with you and your clients. That led on to a conversation around efficiency. So with all this choice, that can lead to decreases in the efficiency of your practice and ultimately impact on profitability. But hopefully now by seeing open integration, how that automates the process of bringing clients' bookkeeping data into your compliance solutions and sending data back, it removes the need to keep switching between two applications in that process. And the final point is about future-proofing your practice. So we've seen today how open integration makes the compliance process more efficient. But what you may not know is if you are currently involved in HMRC's pilot of making tax digital for income tax, the open integration data can be brought into CCH OneClick, and that data can populate automatically the quarterly report and return. And that's just another use case of how we can use that data, and then that data can be submitted from CCH OneClick. We also will be using the open integration to power our advisory solutions. So you may not be aware, but we are currently running roadshows throughout the country throughout the month of October. And what we're really talking there is that we're talking about the journey, a practice's journey from compliance to advisory. And we're going to be showcasing our new advisory solution as part of that. But linking that back to open integration, you'll hear about how the open integration data will power those advisory solutions. So we've covered a bit about how the efficiency savings from a compliance process, but as we move forward, we will be expanding the use cases, for want of a better word, of what we can do with that data and how we can increase efficiencies across the board. So let's move on to some questions that we've received. So we've had a couple, and I think I've answered a couple already. Let's have a quick look through the list. So the first question was all around how do I make a suggestion for a new bookkeeping solution. So I think we've covered that, and I've talked about, User voice is the best way to do that, but if you've got any suggestions while you're on the call now, please feel free to drop those into the question box, and we can pick that up. How often does the synchronization between open integration and the bookkeeping software take place? Lamona, do you want to pick that one up?
Yeah, sure. So basically the data is synchronized automatically every night, and it retrieves new transactions input since the previous sync. So any existing transactions that were amended since the previous sync. So it will just pick up what's new, but every night.
Okay. Thanks. We've got another one actually, Lamona, that you might be able to answer, which is all around. I think we might have covered this actually, but I'll ask it anyway. Can we map more than one zero code to a CCH accounts production code?
Yes, absolutely. So you can map multiple external codes to one CCH accounts production code.
Okay, thank you. We have another question about switching of, so what happens if my client switches to a different bookkeeping solution? So that's absolutely fine. So when you set up the bookkeeping solution, that can be disconnected at any time, and within that option, you have the option to select another bookkeeping solution at that point. So yes, you can, if clients are switching bookkeeping solutions, that can be handled within the setup screen very, very simply. Another one we have here, Lamona, is with a new sync. So when we synchronize, is it just bringing in new transactions each night, or is it the full list of transactions each time?
No, it's just the new transactions, or if something has been edited, then those will be sort of brought in because it will reverse them. It will sort of bring the in and the out. So it's only new transactions.
Okay. Any more that you can see? Is there anything else, Lamona, that you can think, or are these ones that we're going to have to take away?
I think that's probably. I think we need to take some away.
If you have answered a question and we haven't answered it, we will take it away and we'll get it answered. And within the next few days, we will get back to you with the pack, with the recording of the webinar, with the questions answered. We will get back to you on any questions that we haven't answered. I'm just going to have another quick look through. We have got quite a lot on the list here. I think that stands out. No, I think that's probably all we'll be able to answer for today. There was one around the last one that's just come through there. What software do you integrate with? So just to reconfirm that, we currently integrate with Xero, Sage 1, QuickBooks Online, Exact, and Twinfield, and our immediate focus for new integrations is going to be on Sage 50 and FreeAgent, and the plan is to be working on that early next year. What is the trigger for the transactions? So the synchronization is every night, so it's overnight, but it can be done manually on request as well. If you're in that process and you want to just bring those transactions through, you can do that at any point in time. Can we only download the trial balance? Yep. So that's something that we've changed. So we previously were bringing through all transactions, and we did get feedback that for some people that was fine, but for other people they only wanted to bring through a trial balance. So yes, you now have the option on individual clients whether you bring through just the trial balance or all of the transactions. Okay, I think that's all we'll cover today. Like I say, any questions we've missed, we will get back to you on them. And I'd just like to take this opportunity to thank you all for your time this morning. And if you have any further questions, please do just drop them in that box, and we will get around to them. Thank you very much.